Good morning, everyone. So I hope India's 102 has been clear to all. We shall now commence the new standard, that is India's 19, which deals with employee benefits. Okay. So a slightly technical standard in terms of the manner of calculations, slightly complex, but a very interesting standard, so to speak. It's also come in your examination couple of times, so it's quite important. And definitely it's very scoring. Okay. So you could uh, see what all we will be covering through the topics that we intend to cover today and tomorrow to wind up this standard. So basically, what is Ind AS 19? Why is it required? What is the scope, that is the coverage of the standard, applicability and non-applicability? Then what are my various employee benefits, which are classified into four categories? The first one is short-term employee benefits. Second is post-employee benefits. Third is other long-term employment benefits. And fourth is termination benefits. So all my benefits are going to come under these four broad categories. And then we will look at the accounting of each of them. Okay. So in post, what do you mean by short term? How do you account? Post employment. What do you mean by defined contribution plans, defined benefit plans? How do I account for both of them? What exactly do I mean by long-term employment? What is the difference between post-employment and long-term employment benefits? What is termination benefits? Difference between post-employment and termination benefits. And then we have two appendices A and which are largely theoretical in nature. Okay. So that's about the introduction of what all we will be covering. So with that, we start. I hope everybody has joined. Good morning, Kishore. Good morning, Monica, Niranjan, Nisha, Jini. Good morning. Okay, good morning. So let us start the standard per se, that is Ind AS 19. Okay. Acha, tell me one thing. Did we have a corresponding standard under the accounting standard regime? Answer is yes. Accounting standard 15 that dealt with accounting for employee benefits also had this particular concept, that is employee benefits being discussed on a major scale. Okay. Now, why is employee benefits requiring a separate standard? That is the first thing. Secondly, what do I seek to achieve by the application of this standard? Then we'll move on to the remaining things. So why do I need a separate standard for employment benefits? Because employee cost is the next major item sitting in your profit and loss after the cost of goods manufactured or cost of goods sold. That is, if we are talking about a manufacturing industry or a retail industry. In fact, if you talk about services industry, it is employee cost only, which is the major item sitting in your statement of profit and loss, which makes this which makes this as a highly material item in the statement of profit and loss. Any error in recognizing or any conceptual mistake that we do or anything that is not in line with this standard is not only impacting the P&L, but it will impact my balance sheet as well. And therefore, there will be a pervasive effect if the compliance to this standard is not adhered to. If the standard was not given, various people would account for various employment benefits the way they wanted, and standardization could not be achieved. So that is one of the reasons why we have a separate standard altogether. Now, when we come to the topics of discussion, what are the objectives? So objective is very simple, to prescribe accounting and disclosure for employment benefits. Okay, for employee benefits. Now, sir, usme kya hai? That is very simple. So what the standard seeks to provide is, as and when the employee provides services, as and when the employee provides services. See, employee will do the work for the organization. So the organization gets certain benefits. Against that benefits, the standard tells you will have to match the cost. That is the whole intention of this standard. My cost, which I recognize in the P&L, should be in proportion to the efforts that the employee has put in that particular time period to generate benefits, to generate benefits to the employee, to generate benefits to the employer. Is it okay? Yes. All right. Now, this is easy as far as your monthly salaries, your monthly provident fund, your monthly ESI contributions you are handling. Okay. But what is not easy is payments towards gratuity, payments towards pension, payments towards leave encashment. Sir, why is it not easy? Gratuity, when do I pay? Sir, gratuity you pay after he completes with at least 5 years of continuous employment as per the statute. Generally, at the time of resignation or retirement, the person, if he has completed 5 years, he will be entitled to gratuity. He will take the gratuity and go. Okay. So now if he takes the gratuity and goes, when am I going to accrue the gratuity? Should I accrue the gratuity when he puts his resignation on the table? Should I put his gratuity in the notice period that he's serving the organization? Should I put his gratuity in the P&L when he's actually left and I cut the check and pay the gratuity amount to him? Or should I accrue the gratuity during the period of service that he has given to the organization? Or should I start accruing the gratuity once he has completed 5 years? That is the question that most of us would be having. And that is the question that this standard addresses also. Same case for pension. How do I do the accounting for pension? Do I do the accounting for pension after he retires? Or do I accrue the pension while the employee is still working for the organization? What do you think? When should you accrue the pension? Yes?
Working for the organization.
When he is working for the organization, once he resigns or retires, there is no benefit accruing from the employee to the employer. So you have to recognize the pension as a liability when he is very much serving you. It is like saying gratuity, pension, etc. are deferring the current salary to the subsequent periods so that he is entitled to some income at the time of his retirement from service or resignation thereafter. Okay. So therefore, there is a guarantee of some income. So we end up creating provisions. The basis of those provisions is outlined in this particular standard. Is it okay? So that is the objective. Now, it is, so as I explained, it is very easy to account for monthly outflows, salary, contribution to PF, ESI, all these things, it's very simple to calculate. But outflows on superannuation. Superannuation means he has completed 60, the retirement age has come, he is supposed to resign. Is supposed to leave the organization, or on resignation, or on wage revision, accumulated leave encashment, gratuity, etc. So if the standard was not there, there is a tendency to account for these expenses on a payment basis. On a payment basis. See, the entity knows that there is a liability, but फिर भी बोलेंगे हम payment के time पे account कर लेंगे. So if Ind AS 19 was not there, this would have been the probable tendency. So the matching principle and the accrual basis, both of these would get violated, thereby violating with the conceptual framework for financial reporting under Ind AS. Okay, so that is the reason why this standard assumes significance. It ensures compliance with the framework that is outlined. Okay, so two very small questions just to cover whatever we have discussed till now. So, Saran Limited, a company to which Ind AS applies, accounts for leave encashment when the same is paid to its employees. Comment on the accounting treatment. Obviously, you cannot account like this. This accounting is pay as you go basis. Matlab, when you are going, that time I do the accounting. I cannot do it like that. I will have to accrue the cost and then I will have to make the payment out of that provisions which I have accrued. Okay, so that is the first question. Very simple. Question 2, an extract from the accounting policies of a government company is given below. Retrospective wage revision pursuant to the 7th Pay Commission coming in force has resulted in an increase in the pension liability by 240 crores. Such increased liability is being provided in the accounts in a deferred manner over 6 installments commencing from the year 1920. Okay. Now, what do you mean by, do you see these things happening? Retrospective wage revision, 6th Pay Commission, 7th Pay Commission. Do you see this? Have you heard this before? Yes. Have you heard these wage revisions?
So, for example, for the payments made to teachers of government schools,
Yes.
there are revisions that are made by the government. The government so that their wages are at par.
That's right. That's right. So you tell me this company wants to defer it over 6 installments. This is pertaining to some past cost. There is a retrospective amendment. Now, when should the entity account for it? Should it be done immediately or should it be deferred over the coming 6 years or 4 years or whatever it is? What do you think?
Immediately, sir?
Immediately. There is no option. This is something which has been rendered by the employee already. He is not going to give future benefits to you. So ideally, the moment you plan for a wage revision, you have to take the full hit in the P&L of 240 crores at the time the wage revision is approved by the 7th Pay Commission. The moment it's approved, take the hit in the books. I don't have any option to defer or treat it as a prepaid item or treat it as something which I can carry it forward. It's not permitted. Okay, because this is pertaining to past services rendered for which I am compensating. Okay, so that policy is not right. It's not in line with Ind AS 19. Okay, all right. So what is covered under Ind AS 19? That is inclusions and exclusions. Okay, so inclusions, it is applied by employer in accounting for all employee benefits. So these are categorized under 4 types: short-term benefits, post-employment benefits, other long-term benefits, termination benefits. What do you mean by short-term? Short-term typically will mean your payments which are expected to be made within 12 months of becoming due. It could include monthly wages. It could include your monthly wages. It could include contributions to PF, etc. It could include, contribution to superannuation funds, whatever is there, which happens on a regular basis within 12 months. That goes under short-term employee benefits. Then I have post-employment benefits. This is after completion of employment. After completion of employment means superannuation only? Answer is no. It could mean superannuation or it could mean voluntary resignation. So after these two things happen, then at that point of time, the entity is going to give some benefits like gratuity, pension. Okay, all those benefits accounting is covered here. Other long-term employee benefits. Okay, so this is a typical residual category. Basically, this is payments made to employees who are serving the entity. They have still not superannuated, they have still not resigned. But for the long duration that they have served, typically a long-term service award is going to be given. A recognition, a monetary recognition for the time that they have spent in the organization, for the years of effort they have given. A long-term benefit is going to be given to them. Okay, like for example, a cash payment of 50,000 to an employee who has served the organization for 10 years. Now, this becomes a long-term benefit. This is there in your policy right from the time when this employee has joined. Okay, even before that it was there. But how do I account for this 50,000 accrual? Is it happening right at the end? Has it been considered period on period? So that is something we will be seeing. And finally, we have termination benefits. This is basically the employer terminates the employment. The employer terminates the employment either before retirement, voluntarily, either voluntarily or otherwise. Results of terminating employment before retirement. Okay. So this comes with your VRS schemes, retrenchment compensations. All these are covered under termination benefits. Okay. So four categories which we are going to study. Now, what is excluded? The standard which we have just now covered, which I told you there also that there will be a linkage. Share-based payments are not covered here. Why? Because we have just finished that. So I will not be teaching that all over again because that's over. It's a part of Ind AS 102. It will not be covered. Coming to the other one, accounting and reporting by employee benefit plans. What is employee benefit plans? We will see that. Okay. Now, who is an employee? This is also defined in the standard. I hope you can see the definition. It includes a full-time employee. It includes a part-time employee. It includes permanent employees on the rolls of the company. It includes casual or temporary basis workforce. It also includes directors and other management personnel. Okay, so there is a very broad and wide encompassing definition. It's not restricted purely to the payroll employees. It includes full-time, part-time, permanent, casual, temporary basis, directors, management personnel. All these things put together will be covered under employee benefits. Now, what comes in employee benefits? Okay. Benefits provided to employees, dependents, beneficiaries may be settled by payments or provision of goods or services made either directly to the employees, spouses, children, or other dependents to legal heirs or nominees, or to others such as trusts or insurance companies. Okay. So, we had certain we have certain examples of very unique employee benefits which are given. Like for example, until recently, we had Google, which gave a death benefit. When the employee dies, Google was taking care of his salary for the next 10 years by paying it to his spouse or children as a support. Now, death benefit also is an employee benefit. But sir, employee kahan benefit ho raha hai? Employee to guzar gaya. He is no longer there. He passed away. So how is the employee benefiting? Not necessary. Even when benefits are being paid to his dependent spouse or children, those also will be covered under employee benefits. Are we able to understand? So it's a very, very broad definition. It's a very broad definition. It's not restricted to only payments made to employee alone. Even to his family, whatever goes is covered as employee benefits. Okay, all right. Now we come to the accounting of these benefits one by one. Okay, simple hai. Short-term benefits are very simple. You will have only a small technicality when we do compensated absences and non-compensated absences. That's it. Otherwise, it's very simple. Okay, now short-term benefits. These are benefits due to be settled within 12 months after the end of the period in which the employees render the related services. Okay. So today they have rendered the service. Within 12 months, payment is going to be made to them. So categories में भाई क्या क्या आएंगे इसमें? It could include salaries, wages, contributions to social securities, welfare schemes, that is PF, ESI, whatever is there. Paid annual leave plus paid sick leave, whatever you have. Profit sharing and bonuses. Normally bonus accruals happen. And any other non-monetary benefits. Obviously, non-monetary benefit ka accounting to directly hoga nahi because that is non-monetary. Okay. So when I talk about these accountings per se, there are a couple of things. It is a very simple entry, expense account debit to liability or cash. If the employee is working on construction of an asset, then the cost will be debited to the asset in line with Ind AS 16, which requires that any cost directly attributable to construction of the asset must be capitalized. So therefore, in such case, employee cost will be capitalized in the value of the asset. Actuarial assumptions are not required for measuring obligation or the cost. Have you heard this term actuarial assumptions? How many of you have
AS15 में हर्ट किया था.
AS15 में था? It was there in AS15, right? Do you know what is actuarial assumptions? What
There
gets
are there are actuaries who are professionals like chartered accountants who make a estimate of what the liability would be for a year, and the company makes a provision based on these assumptions. I mean, based on the estimates that the actuarian provides.
That's right. So this is the activity that the actuaries do. But what exactly is actuarial assumptions? We will go through in detail. Ki bhai, what comes under actuarial assumptions? Demographic assumptions, even your economic assumptions that they do. There is a different category of assumptions. So we call that as an actuarial assumption, and we will see how to do the accounting for those assumptions, okay, or change in those assumptions. All right, next, straightforward accounting, no possibility of actuarial gain or loss, obviously, because actuarial assumptions ही नहीं है, so you will not have actuarial gains or loss. Measured on an undiscounted basis, so since it is being paid within 12 months, there is no need for you to do any discounting. No specific disclosure is required. Other than Ind AS may require disclosures like payment to related parties, Ind AS 24, for example. Okay, but otherwise, no specific disclosures. If there is a change in timing of settlement, see, short term is expected to be paid within 12 months. Expected to be paid within 12 months from the date of rendering of the service. But suppose the settlement is happening beyond 12 months. Then we ask two questions. Is this settlement change temporary? If yes, then reclassification to long term is not required. But if it is not temporary, or the nature of benefits only change, then you will have to ask the question whether short-term benefit is classification is correct, or should I change the classification to long-term employee benefits. Okay, so that is your broad category of short-term benefits which are going to be covered. And now we come to the important part, the slightly technical part, that is short-term compensated absences. Short-term compensated absences. And for this, what I will be doing is, we will start by going through the questions, and then I will come back to this particular slide to, so that we can then understand the meaning of these terms better. Okay. So let us look at the questions. Let us try to solve these questions, and then we can, understand what is the theory which is there. So these are picked up from your study material, largely something that I did even in Ind AS 102. Okay. This is a very simple conceptual question that is given. Okay. So it's not so straightforward in real life. Okay. Practical life, I have put in another question, which is something which you see more, and that is something which you could probably even expect in the examinations. But this is just to make you familiar with the understanding of the concept of compensated absences. Okay. So now let us look at this question. It's there in your study module, so we can refer the study module itself. I hope it's visible. Mr. Rajan is working for Infotech Limited. Consider the following particulars. Annual salary, 30 lakhs. Okay. Total working days in year 1 is 300 days. Leaves allowed as per the company's policy is 10 days. Leaves utilized by Mr. Rajan in X0, X1 equal to 8 days. The unutilized leaves are settled by way of payment. The unutilized leaves are settled by way of payment, and accordingly, carry forward of such leaves to the subsequent period is not allowed. Compute the total employee benefits for Infotech in respect of 20X0X1. Is it okay? Question is clear. So employee has 300 working days. He is entitled to a salary of 30 lakhs for 300 total working days. Again, this is a conceptual question. It is only to help you understand the concepts. Okay. I mean, institute has put in these questions because now it looks simple. But when we go towards leave getting carry forward leave fully taken in the next year, not taken in the next year, how the movement happens, those things come out very beautifully in the coming questions that we see. So now this question may seem very simple, but that's okay. All right. Thus, my per day salary comes to 10,000 rupees per day. Okay. My entitlement is 1 day, 10,000 rupees. I'm entitled to 10 days of leave. So even if I go to office for 290 days and I have a leave of 10 days, I will still get 10,000 rupees per day. In this year, Rajan availed 8 out of 10 leaves allowed by the company. Okay. So accordingly, the unutilized leave is 2 days. The unutilized leave is 2 days. That means what has he done? See, he is having working days. He's having total days of 300. Yes. And 10 days he can take the leave. So he can come. He has to come for at least 290 days to get the payment of 300. At least 290 days to get a payment of 300. But what this gentleman has done, he has come for 292 days. He has come for 292 days. That means he has worked for 2 days extra. Are you able to follow? He has worked for 2 days extra. So he will get 30 lakhs. Plus, he will also get 10,000 per day into 2 days of unutilized leaves. So the total expense that Infotech will be charging is 30 lakh 20,000 in its profit and loss account. Are we okay with this? Yes. Any doubts? Okay. So when I look at my theory, I am having something known as accumulated paid absences, and second one is non-accumulating paid absences. Accumulating paid absences, non-accumulating paid absences. Accumulating means what? I can carry forward for use in the future periods if current period's entitlement is not used in full. Second category is non-accumulating. Cannot be carried forward. Cannot be carried forward. They lapse if the current period's entitlement is not used in full. So you tell me based on this question and this statement, is it going to be accumulating absences or is it going to be non-accumulating absences?
Non-accumulating.
Obviously non-accumulating. Okay. I cannot carry it forward. They lapse. Okay. Obligation arises when absences occur because employee service does not increase the amount of benefit. Okay. So absences occur because employee service does not increase the amount of benefit. We'll understand this statement a little later. Okay. We'll understand this statement a little later. Okay. So this is the first question that takes care of this. Okay. That is handling this one. Okay. Okay. Next, let us move on to the next question. Let us now understand non-vested accumulating benefits. Non-vested accumulating benefits. Okay. All right. Mr. Niranjan is working for Infotech Limited. Consider the following particulars. Annual salary 30 lakhs for years 1 and 2. Number of working days 300 days each. Leave allowed 10 days. First year he has taken 7 days leave. Unutilized leave carried forward to the next year is 3 days. Next year he takes 13 days leave and then his leave balance is becoming 0 in the next year. Based on past experience, Infotech assumes that Mr. Niranjan will avail the unutilized leaves of 3 days of year 1 in year 2. Infotech contends that it will record 30 lakhs as employee benefit expense in each of the years X1 and X2, stating that leaves in any case will be utilized by the end of year 2. So comment on the accounting treatment proposed to be followed and also pass the journal entries. I hope you have understood the question. Okay, I hope you have understood the question. What is he doing is, this is the same question. I just put it here so that I have some space to write. Year 1, 300 days are available. Okay. Year 2, 300 days are available. Now, in year 1 also he can take 10 days leave. In year 2 also he can take 10 days leave. If he does not utilize any leave, it can be carried forward to the next year. It can be carried forward to the next year. Okay. Now, he has taken 7 days leave in year 1. That means he has come for how many days? 293 days. He has actually come and served the organization for 293 days. Year 2 में वो क्या कर रहा है? Year 2 में he has taken a leave of 13 days. Sir, can he take 13 days and still get full payment? Answer is yes, because that is the policy. Per year 10 days, and I can bring forward the leaves of the previous period also. So I bring forward 3 days, my 10 days current year entitlement, so 13. So this comes to 287 days. This comes to 287 days. Now you tell me, matching revenue and cost. How many has he worked for the same number of days in year 1 and year 2?
No, sir.
He has not worked for the same number of days. Okay. He has worked more in year 1 and he has worked less in year 2. है कि नहीं? There is a difference of 287, 293. There is a difference of 6 days. He has worked 6 days more in year 1 and he has worked 6 days less in year 2. So now you tell me, if he has worked more in year 1, shouldn't I be charging more cost in year 1? Yes, I should be charging more cost in year 1. Yes or no, everyone? More cost in year 1. Yes. He has worked less in year 2, so I should be charging a lower cost in year 2. Look at the words which we are using. I'm talking about charging a higher cost in year 1, charging a lower cost in year 2. But tell me one thing, will the payment remain the same in both the years? The payment that must go to him, 30 lakh rupees, will it be the same in both the years? Very simple question.
Yes, sir.
It will be the same.
Same.
It will be the same. Sir, why are you saying that? Because the leaves that he has availed are within the entitled leave policy as per the company. Okay? So now you tell me, company says, उसने यहाँ 3 दिन लिया. He has taken 3 days lower here. He will take 3 days higher in the next year. So what difference does it make? I will book 30 lakhs here. I will book 30 lakhs there. Both the years put together, 60 lakh should have been my cost. 60 lakh is my cost. Can he take that shelter of the policy and the payment that goes and do the accounting? Answer is no. He cannot. He cannot take that shelter. Okay. He has come to the organization for 3 more days in year 1. So ideally, by coming for 3 more days, he has delivered benefits to the employer for additional 3 days. And because he has delivered benefits to the employer for additional 3 days, the cost matching those benefits for 3 days must also be hitting the P&L. What is the per day cost for this person? Sir, per day cost is 10,000. Okay. So I will be paying him expense debit 30 lakhs. This is the basic amount that I have to pay. But can I stop at 30 lakhs? Answer is no. He has come for 3 extra days. So uske liye further expenses that I will be debiting is how much? Yes,
6,000.
30,000 rupees. I will be debiting a further 30,000 rupees. But payment jo hoga, what will be the payment that will be made? Will it be 30 lakhs or 30 lakhs, 30,000?
Only 30 lakh.
30 lakhs. Yes. And next day, what will be the balance?
Provision.
Provision for unutilized leave. 30,000. Okay. So this is the first year entry that you will be passing. He has worked more. I have charged more to the P&L. Okay. Now coming to year 2. Has he worked more or has he worked less? He has worked less.
Less.
3 दिन उसने कम काम किया है. He has worked less by 3 days. So उसका salary cost or expense hit should be how much? 30 lakhs minus 10,000 into 3, 30,000. Are we okay with this?
Yes, sir.
So by coming less, my expense in the P&L will be 29 lakh 70,000. But payment will be how much?
3 lakhs.
30 lakh.
30 lakhs. So this difference of 30,000
Provision from
will be
unutilized.
reversal. Provision for unutilized leave. This 30,000 rupees is the provision that I created in year 1, which I am reversing in year 2. Have you understood this? Yes. Hemant
Yes,
has confirmed. What about others? Pooja, Niranjan, Kishore, Jeannie has confirmed. Yes, Monica also is there. Nisha has confirmed. Okay, fine. Okay. So that is how you have to do the accounting. So the golden rule that we take from our side today is एम्प्लॉई ने कितना काम किया एक साल में, उसके प्रोपोर्शन में हमें कॉस्ट रिकॉग्नाइज करना है. हाउ मेनी डेज द एम्प्लॉय हैज वर्कड, how many days has he given benefits to the employer? In proportion to that, the cost must be charged to the PN. Okay. I cannot take a policy and do my accounting basis that policy. That policy is only giving you the guidance on how my leave utilization is going to happen. Okay. So the same thing is explained here. So expense to be recognized in year 1, 30 lakh 30,000. Second year, 29 lakh 70,000. So you can see they created a provision for leave encashment 30,000, and that is utilized in the next period. So now let us come to this category. Leave can be carried forward. So it becomes an accumulating paid absence. It becomes an accumulating paid absence in the question that we just saw. Against this accumulating paid absence, what is he getting in future? Is he getting cash or is he not getting cash in the future? Bolo?
Sir, cash.
Where is he getting cash? See.
Now, just getting it as and when employees recognizing the expenses.
No. Okay, let me reframe my question. Today he has taken leave of 7 days instead of 10 days. Is he getting cash today for the 3 extra days that he has worked?
No, sir.
No. Instead, what is being given to him? He is able to carry forward this leave to the next year. Yes. He is entitled to carry forward this leave to the next year. So this becomes what they call as non-vesting accumulating benefits. Non-vesting, not entitled to a cash payment. Not entitled to a cash payment. Against a leave unavailed today, you are getting a leave tomorrow. You are not getting cash. Have you understood? You are able to carry forward this leave for usage in the subsequent period. समझ में आ गया आपको? Did you follow?
Yes, sir.
Yes. तो इसको हम लोग बोलते हैं नॉन वेस्टेड accumulating paid absences. नॉन वेस्टेड accumulating paid absences. Yes. Did you understand this? Now we come to this para. Obligation arises as employees render service that increases their entitlement to future paid absences. Now, in this question, he has taken leave of only 7 days in year 1. Yes or no? Yes. So he has come to the organization and worked for 3 extra days. Yes or no? Yes. So by coming and working for 3 extra days, he has increased his entitlement for the next year by a further 3 days. Have you understood that? Yes.
Yes, sir.
So, because he has come for 3 days in the year 1, I made a provision of 30,000.
Yes, sir.
So, what is happening? The company's obligation has arisen because that employee has rendered the 3 days of service, which has increased his entitlement in year 2 to 13 days of leave. Yes or no? समझ में आ गया? Yes. This obligation of 30,000 came because the employee rendered 3 days service in year 1 additionally, which has increased his leave entitlement in year 2 by that 3 days. Have you understood this?
Yes, sir.
Yes. And that is why the recognition of this obligation happens on the basis of services rendered. Happens on the basis of services rendered. Any doubts? No doubts. Okay, perfect. All right. So now that takes care of illustration 2. Okay. Illustration 2 is done. Now, let us move to illustration 3. Let us move to illustration 3. Okay.
Sir, if the salary packages increases in the second year,
What happened? Okay, if the salary package increases in the second year, we'll come to that. We'll come to that. Okay, see, if the salary package increases in the second year, okay. So if 30 lakhs becomes 31 lakhs, okay, if 30 lakhs becomes 31 lakhs, he will be entitled to a payout of 31 lakhs. Yes. So whatever differential is there, we will be moving it to your profit and loss account. Whatever differential is there, we'll be moving it to profit and loss account. So if I have to extend that question, next year, his entitlement of salary is not 30, but 31 lakhs. So how much is he going to get? 31 lakhs. Have you understood this? Yes. And then this difference, 31 minus 30, that is the additional entitlement, is obviously the next year's salary. So that will hit your profit and loss account. Okay, so profit and loss, what is getting it is 30 lakh 70,000. And then provision for unutilized leave, I will be reversing to the extent of 30,000. Have you understood? Yes, Hemant, clear? All right, fine. So that is your question 2. All right. Now this part gets interesting. Based on past experience, Infotech assumes that Mr. Niranjan will avail the unutilized leaves of 2 days of year 1 subsequently. However, in year 2, Niranjan availed actually all the 3 days of brought forward leave. Compute the expense to be recognized in year 1 and year 2 and also pass the journal entries for both the years. Okay. So in this case, he has availed 7 days leave in year 1. That means balance is how much? 3 days. But what I am estimating is, what the company is estimating is, he will not take 3 days. He will take only 2 days leave in the future. This is a 1 year compensated, 1 year carry forward that is there. So therefore, he will take only 2 days leave in the future. I know him. He comes, trends hai hamare paas, where he has not taken anything more than 12 days in the past. So 10 plus 2, 12 days later, 1 day will not be taken by him in the future. Okay. So the estimate that they do is, he will not be taking 3 days, but he will be taking only 2 days in the future. Okay. So if that is the case, what the standard wants you to do is, you will make a realistic provision in the P&L. You cannot make a provision for entire 3 days. You will make a provision only for 2 days, because that is the absence that you expect to be paid in the future. Are you able to follow? That is the absence that you expect to provide in the future to the employee. समझ में आ गया अपने को? Did everyone follow? Yes or no?
Yes, sir.
Pooja, Jeannie, Monica, Kishore, Disha, all clear. Okay. So what the standard tells is, you make a realistic estimate of the leaves that he will utilize in the subsequent year. So by मुझे लगता है that 2 days leave is what he will be utilizing. So in year 1, the entry that you will pass is expense account debit, $30 lakhs. Further expense account debit, 20,000 to bank, 30 lakhs to provision for leave encashment, 20,000. Have you understood this entry? Yes. Monica, clear? Okay, Hemant has confirmed.
Yes,
Pooja
sir.
has also confirmed. All right. Now in year 2, Jeannie, I hope it's clear. Okay, all right. Now coming to the second year. Second year, he exceeded expectations and he took 3 days leave. Tell me one thing, is he entitled to take 3 days leave? Additional 3 days. Yes.
Yes, sir.
He is entitled. वो leave ले सकता है. Sir, but you estimated he will take 2. हाँ, so you have estimated na. End of the day, what it is? End of the day, it is only an estimate. So end of the day, you made an estimate, but as per the policy, he is entitled for 3 days leave. You cannot stop him from taking a 3 days leave. So therefore, even if he takes 3 days leave, payment that will go to him is 30 lakhs. Payment that will go to him is 30 lakhs. Have you understood this? Yes?
Yes, sir.
All right. Now comes the next part. How much provision for leave encashment did you make? Sir, I made a provision of 20,000. Yes. So what will be the hit that will go to the P&L? 29 lakhs 80,000. Have you understood this? Yes. Did we understand this? Okay. Sir, it is not looking good because what you have done is you have taken 29,80,000 as a balancing figure. Please explain why it is 29,80,000. Okay. So see, 10 days leave is entitled in year one, sorry, in year two, plus 3 days from year one. He is entitled to 13 days. This gentleman did not come for all the 13 days. 10 days to normal छुट्टी भी लिया उसने, 3 days additional leave also he has taken. So sir, ideally his salary should be not 29,80,000. The expense should be 29,70,000. That is okay. I agree with you. But in that case, what is that differential 10,000? You tell me what is that differential 10,000 in accounting terms.
Sir, goes to P&L.
That is the treatment you are giving. But why should it go to P&L? What is happening exactly between year one and year two? Year one, you estimated he will take 2 days leave and you made a provision. But
Sir, estimation shortfall is there. That's why we charged 10,000 to P&L immediately.
that's true. I only want, okay, listen to my explanation and question. You will be able to give me the answer I am looking for. Year one, we estimated that he will take 2 days leave. But in year three, in year two, he has taken 3 days leave. What is happening to this estimate? 2 ka 3 ho gaya. What is happening to this estimate? Is it remaining same or is there a change in the estimate? There is a change in the estimate that is happening. I estimated a 2-day leave, but he has taken the entire 3 days. So the estimate जो मैंने किया था, the actual has changed. Now a change in estimate, should it be given a retrospective effect or should it be given a prospective effect?
Prospective.
Prospective effect.
That is why that 10,000 rupees additionally which we are paying, we are hitting the P&L. We are hitting the P&L. Have you understood? Yes, Hemant, is it clear? Girls have confirmed unanimously. Yes. So Hemant, did you understand that one additional day which he has worked, sorry, which he has availed will be an expense in that period itself. It will go under employee benefit expense. It will go under employee benefit expense. Okay. It is merely a change in accounting estimate. It is merely a change in estimate. We take the hit in employee benefit expense itself. Perfect. Acha.
So what if that one more day he will take in third year? Is that like that? Means what I feel is that full 3 days I have to provide for in first year. Second
Okay.
year I will reverse to the extent of 20 if he takes 2 days. If it is 1 day he's taking in third year, I will reverse the provision there. Then it will be equal, no?
See, that's what. See, I also come from the same school of thought as what you all are currently coming from. Okay. हम कैसे लोग हैं पता है? After writing exam, if our paper has gone good, really good, excellent, will you say my paper has gone excellent or will you say it was okay, it was fine? How are you going to give your response?
Good.
At the most, you will say good. You will not say it is outstanding, it is excellent, I did very well, I expect a 90 or 100. We rarely come out with this kind of expressions. Why? Because we are trained to be conservative. Because we are trained to be conservative. Conservatism is ingrained in our subconscious, right? So my first step immediately as auditors or as chartered accountants or as students is He came for 3 days extra. He's entitled for 3 days in the future. I make a provision of 3 days right now and keep quiet. That is what you used to do under AS 15. That is what you used to do under accounting standard regime, where any provision that is there, you take the hit immediately in the P&L. आगे क्या होगा पता नहीं. Today I have this liability, provide for it in full. But what Ind AS tells is, don't be overtly conservative. Conservatism is to be exercised, but it should not become a haunting thing that you only do conservatism all your life. Be realistic. Be realistic. Be what you can say, give a true and fair view. Now look at this employee case. If I have adequate data to back up, stating that he has worked for he has taken maximum 12 days in any given year. Let us assume he is an employee who has served for 20 years. And in all the 20 years, uska leave 12 days se zyada kabhi nahi gaya hai. He has never taken more than 12 days. Don't you think the company is justified in making the estimate of 2 days leave encashment? Yes.
Yes, sir.
So when the company is justified in making a 2 days leave encashment, there is no harm in not providing for that additional 1 day. But
we have to pay him, no, sir. Means we are liable
I
to pay
don't
whether he
deny.
takes or no.
I don't deny your argument. Okay, perfectly fine. Sir, we have to pay. Here, it's not going to the third year in this particular question. So at the most, the inference that I can draw is 1 year can be carried forward to the next year and then the carry forward ends. Okay, so that is what we will have to assume. Okay, that is one hidden assumption which is there in this question. Okay, so carry forward and all, I have not yet gone to 1 ka 2, 2 ka 3. That's a never ending process for you and me. Okay. Then we get into real life. Okay. Then we get into real life. In real life, these things move on and on. So it probably goes on a FIFO basis. It probably goes on a FIFO basis. Matlab, when he has taken, say, 11 days in the next year, I will utilize first 3 days, then 8 days. So then 2 days will be left. That will move on to the third year and that will go on and on. But here I had to bring it to a closure. Institute had to bring this to a closure for our understanding because that is very critical for us. Okay, that is very critical. Now, I have to pay 3 days. Agreed. But अगर मेरे पास adequate data है for us to substantiate our claim that he has not taken more than 2 days, perfectly fine. Make a provision only for that. So what am I assuming is next day he will come for at least 288 days. He will come for at least 288 days. Nothing wrong in your assumption. Nothing wrong in your assumption. But if he comes for 287 days instead of 288, it becomes a change in assumption. It becomes a change in assumption. Are you okay with this? Yes?
Yes, sir.
Sinking takes time. This concept to sink in us, in our mind, takes time. If you remember Ind AS 115, variable consideration. Do you remember variable consideration? Revenue standard. You people have studied Ind AS 115?
Yes, sir.
Yes. आपको variable consideration याद है? I'm coming to your query, Hemant. Okay, I have seen your query. Okay. What do you do to variable consideration? Just drill yourself. Yeah. Tell me, Nisha.
Based on the possibility that it would occur or not.
Yes. So suppose I am constructing a bridge. The timeline is 5 years, which is sanctioned to me. If I can complete it within 4 years, the government gives me 5 crore bonus. The contract for constructing the bridge is 520 crores. 520 crores is the bridge contract. If I finish it within 4 years, I will get another 5 crores. That is 525 crores. We follow contract accounting. Because we follow contract accounting, I have to accrue some revenue every year on year. So when I have to accrue the revenue year on year, I should know the price of my revenue. I should know the total contract value. Yes. What are you going to assume as the contract value at the beginning? Under AS9 or AS7, what would be the contract value you would estimate? 520. You would estimate the contract value as 520. Because there we are trained what? Do not recognize a bonus until it is actually received. Today you are in year 1. How can you be so sure that you will be executing this in year 4? So today you build your revenue based on 520. If you finish in year 4, you book the revenue in year 4. There is no harm in doing that. This is where Ind AS comes with a difference. Ind AS tells no. Do you have enough exposure of constructing bridges? Let us assume this company is Larsen and Toubro. L&T has done thousands of infrastructure activities, constructing roads, bridges, dams, you name it, and L&T has done thousands of them across the world. So L&T say, if anybody asks that question, L&T will say, I know this like the back of my hand. Why 4? I can even finish it in 3 years. But we are definitely confident. We have the team, we have the tools, we have the equipment, we have the material. It's all planned, chalk the block schedule that we are working on. And that is why Ind AS 115 says, then be realistic in your revenue projections. Be realistic and record the revenue accrual based on which value? Based on 525 crores and not 520 crores. There is no other condition attached to the realization of this 5 crores, and there is nothing that will stop you. There is no adverse condition that you foresee that will make you not attain this target within a period of 4 years. That is why you take 525. Now let us come to the next case. Year 4 में COVID हो गया. COVID happened in year 4. L&T could not execute the project in 4 years. It went to the 5th year. So if it went to the 5th year, now this is nothing but a change in estimate. See, even the best of people at that time could not estimate that COVID, a life-threatening event of such a nature, would ever come to this world. And therefore, they are perfectly justified in changing the accounting estimate. The revenue buildup that would happen in year 4 and 5 would be taking into consideration 520 crores instead of 525 crores. And then there would be a proportionate reduction in revenue that you will recognize in years 4 and 5, such that the cumulative 5-year revenue would be restricted at 520 crores only. Are we okay? Yes. Similarly, in this case, I am perfectly justified to make a provision of 2 days if I know that he is not going to take the leave in the future. So here there is, of course, the presumption that the carry forward beyond 2 years does not happen. Okay, that is the presumption which we are living with. Or this could be a LIFO basis of adjustment, where first they take out the leave from current entitlement, and previous entitlement they will allow only for the next 1 year carry forward, otherwise it will lapse. So if that is the case, fine, 12 days I expect. He has taken 13 days. We make it as a change of estimate and do the changes prospectively. Have you understood, everyone? Anila, understood? Jeannie, understood?
Yes, sir. Yes, sir. So employee wise, he will be receiving the same amount. Only thing is our P&L will have the
Yeah.
effect. That's all, right?
Yes, yes. Now let me counter this question. Do you think management can play around with this tool which is given to them?
Yes, sir.
Yes.
Definitely, yes.
Management can play around with this provision. See, there is a plus, there is a minus to anything which is there in accounting. So if the management wants to show a profit in year one and they look at this provision, what they will say? That employee, he never takes leave beyond 10 days. So I will not make any provision in the current year. Why should I make a provision in the current year? I know he will not take leave more than 10 days in year two, and therefore they will recognize only an expense of 30 lakh rupees. So what becomes important for us? We not only will have to account the figures, we not only have to audit the figures. Figures is fine, but there is an estimate behind these figures. What is the estimate? He will not avail these leaves in the future. So then you will have to audit the estimate that is there behind these figures, which comes under your SA 540. Have you understood now? Yes. So in
Yes.
your Ind AS, it's estimates also that create a very significant impact on your accounting. And that is why you have plethora of estimates, starting from revenue standard to expenses to depreciation to what you can say, even your lease calculations. Every standard is having an abundance of estimates. So our job becomes very complicated when I have to certify the financials as being compliant with Ind AS, especially given that there are so many estimates which have a direct bearing on your profit and loss, which have a direct bearing on your profit and loss. Okay, all right, fine. So that takes care of illustration 3. If you see the study material, it's the same thing. The 30 lakh 20, 29 lakh 80. Okay, so this illustration is also done. Okay, so now to answer Hemant's queries. Do we need to have statistics for all employees? Ideally, companies do have statistics for all employees. Okay, statistics hota hi hai unke paas, right? Because they have to map the leaves, who is taking how much is he entitled to, etc., etc. So statistics are already there with them. They don't have to do it all over again. Okay. All right. You have to review those statistics to be convinced that the leave that he will take in the future is only 2 days. You have all the right to question the estimate. So what happens is we typically end up management estimate, take a representation and come out of it. But we have an obligation to go deeper into questioning those estimates as assurance providers. Okay. All right. Coming to the next one. This is a very simple question. Sundaram has a headcount of 100 employees. As per the policy, the employees are entitled to 30 casual leaves, out of which 10 casual leaves may be carried forward to the next year, and 10 sick leaves, out of which 2 may be carried forward to the next year. At 31st March X1, average unused entitlement is 5 days for casual leaves and 1 day for sick leave. On an average, it is found that the number of such employees who would be claiming casual leaves would be 30 and 10 employees who would claim sick leaves. So compute the liability to be recognized in respect of sick leaves and casual leaves by the entity at the end of financial year X0, X1. So very simple, there is no figure as such here. What they are trying to say is leaves carry forward permitted is 10, 5 days. So 30, 10. So 30 into 5, 150 days salary will be the provision you will make for casual leave. 10 days salary, you will be making a provision for sick leave. That is your estimate. Okay. So we are now moving towards a more practical manner of doing the workings. Okay. All right. Next. An entity has 100 employees who are each entitled to 10 working days of paid sick leave for each year. Unused sick leave may be carried forward for 1 financial. उसके बाद carry forward नहीं होगा. Sick leave is taken out of current year's entitlement and then out of the balance brought forward, what I explained in the earlier question on a LIFO basis. At 31st March X1, the average unused entitlement is 2 days per employee. Based on past experience, management expects that only 20% of employees will use 1 day from their carried forward. Salary per day is 2,500. Compute expenses in respect of short-term compensated absences if they are assumed to be vested and if they are assumed to be non-vested. If they are assumed to be vested, if they are assumed to be non-vested. Okay, all right. Now, simple. Average unused entitlement is 2 days. Management expects that only 20% of employees will use 1 day from their carried forward leave. Okay. So, non-vested. That means what will happen? Non-vested means against leave, you have the benefit of carrying forward the leave. 1 minute. Yeah. Yes. Non-vested, you won't get a cash payment, but you can carry it forward. So therefore, my estimate is 20% of employees only will avail the leave into 1 day into 2,500, 50,000. Vested compensated absences means against this, there will be a cash payment. There will be a cash payment. You will not be carrying it forward. There will be a cash payment. You tell me, should I take 20% of the employees or should I take all the 100 employees?
All the 100, sir.
Because here there is a cash. There is a certainty. Employee can come and demand the cash from. So 100 into 2 into 2,500, 5 lakhs. Okay. So that takes care of illustration 5. Have you understood, everyone? Hemant, समझ में आ गया? Yes. Okay. 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 Non-vested is leave against leave. That is why we have taken 20% provision. That also for only one employee. Okay. That also for only one employee. Okay. Fine. So illustration 5 is done. Now let us come to this question. This is more realistic, or this is very much realistic. Okay. This is how it happens in practicality. Okay. Acer Limited has 350 employees, the same as a year ago. Average staff attrition rates. Attrition rates means number of people who resign.
Leaving.
Yeah, leaving. Yes. So average staff attrition rates observed during past 10 years is 6% per annum. Okay. That means at any point of time, 6% staff will be new, 94% will be old. Acer Limited provides the following benefits to all of its employees. Paid vacation, 10 days per year, regardless of the date of hiring. Compensation for paid vacation is 100% of employee salary, and unused vacation can be carried forward for 1 year. Okay. As of March 20X1, unused vacation carried forward was 3 days per employee. Average salary was 15,000 per day, and accrued expense for unused vacation, that is what I had accrued in the previous year, was 65 lakhs. During X1, X2, employees took 9 days of vacation on an average. Salary increase in X1, X2 was 10%. How would Acer recognize liabilities and expenses for these benefits as of 31st March 20X2? Pass the journal entry to show the accounting treatment. Okay. All right. Shuru kare. Let us start. Okay. Again, paucity of time, which is why I will run you through the answer. Otherwise, I would have made you to solve it. First one, you only tell me. How many employees are in service for the entire year? At any point of time.
329, less than 6%, sir.
94%.
Hmm.
Very simple. 94% will be in service for the entire year because 6% attrition is there. Yes? Okay.
Yes, sir.
So in respect of these 94% employees, can I say that the brought forward leave is 3?
Yes, sir.
Yes, sir.
So 3 days leave for 94% employees, I bring it forward. So this is of 94% employees. Unused leave brought forward 3. Okay. Next. What is the entitlement? 10 days. Okay. And used leave is 9. So that comes to 4 days per employee. Are we able to understand? Yes? Okay. Therefore, total unused vacation is equal to 350 employees into 94% into 4 days per employee. So that comes to how much?
1316.
1316 man days. Perfect. Any doubt so far for anybody here?
No, sir.
So this is 94%. Coming to 6% employees. Who are these employees? Newcomers. They have joined only in the current period. Do I have any unused leave brought forward for them?
No, sir.
No, sir.
They were not there when the leaves were accrued. So they were not there. So I will only have entitlement 10 days, utilized 9 days, so 1 day. 1 day per employee. Therefore, unused leave is equal to 350 into 6% into 1. So that comes to how much?
21, sir.
21 man days. Yes, 21 man days. So what is your total unused vacation? Is equal to
1337 man days.
137.
That's perfect. I'm only assuming that you are not seeing the solution from the study module. Okay.
Mhm.
All right. And I'm right in assuming that. Okay. So 1337 man days. Okay. Now, as of March 31, okay, accrued expense during this much, okay, salary increase in the current year is 10%. So what is the average salary?
15,000 per
15,000
day.
per day.
Is it of current year or last year?
Last year.
So current year, there will be a 10% increase.
16,500.
Yes, salary for X1, X2. 15,000 plus 10%, 16,500. Therefore, accrual of leave encashment is equal to 1,337 into 16,500. So that comes to
22,060,500, sir.
22.
060,500.
Okay. So 2 crore 20 lakhs 60,500. Did you understand? Yes. All right. Perfect. Anybody has any doubts here? All clear, girls? No doubts. Okay. So now, what will be the journal entries that you will pass? Employee benefit expense account debit to provision for leave encashment, 2 crore 20 lakh 60,500. Correct?
Yes, sir.
And that 65 lakhs of last year will be assuming that it's paid off in the current year. Provision for leave encashment 65 lakhs to cash bank 65 lakhs. Okay.
Yes, sir.
Very simple. So that's exactly what is the solution. Okay. So this illustration is also done. Calculation 1316 21 1337 16,500. So this is the current one and unused paid vacation. So provision for this and payment of this. That's about it. Okay. Next. All right. So I think with this, we are done with leaves. Okay. We are done with short-term compensated absences. Anybody has any doubt so far? Couple of questions are still there. That's a bonus is kind. Any doubts on compensated absences? Okay, fine. Okay. So let us then move on to the next one, which is profit sharing and bonus plans. Okay. So typically, sometimes we give bonus or sharing profits to our employees. So present obligation and a reliable estimate. These are the two essential things that we need to have. What is my present obligation and what is the reliable estimate that I will be making? Okay. So when I talk about present obligation, it could be of two types. One is a legal obligation. The next standard that we do is Ind AS 37, that is provisions, where we'll be covering this in detail. But first one is a legal obligation. It could be either statutorily imposed or something which you have as the terms of employment with your employees. So plans require employees to stay till end of specified period to receive share of profits. Agar aisa hai, then employees will render the services, thereby increasing the amount to be paid if they remain in service. Or second case, there is no legal obligation, but entity has a practice of payment of bonus. In that case, we call this as a constructive obligation. We call this as which obligation? A constructive obligation. Okay. So these two things cumulatively create a present obligation on the entity. And for this, we need to have an amount, a measurable amount, for which either it could be a formal plan as per the plan formula, or amounts are determined by the entity, or past practice gives evidence of the amount. Like if the practice is one month salary is what is being paid, one month salary is what is being paid, then that becomes your constructive obligation. Okay. Measurement should reflect the possibility that some employees may leave without receiving share of profits or bonus. Again, not being fully conservative. The standard is saying you don't have to assume all employees will get the bonus. Some people may leave during the period. So if they leave during the period, they won't get that bonus. So therefore, when you make an estimate, please be realistic. See, the whole point of being realistic and not conservative is Ind AS wants to avoid unnecessary reversals of provisions, unnecessary unnecessary reversals in the subsequent years pertaining to past provisions. That is going to impact my results of the future periods, because it won't give a true picture, because some reversal of prior period cost is also sitting there as change in accounting estimates. So that is why this standard requires us to be realistic. Okay. Now, how will I recognize this? Recognize as an expense and not as a distribution of profit. So even though it is a profit sharing plan, you treat it as an expense, as obligation arises from employee giving you the service and not from transaction with the entity owners. So this is employees rendering service, which gives them a right to share the profits, but it is not dividend, or it is not distribution of profit. Okay. All right. Reliable estimate can be. So far, is this clear? Yes. No doubts. Okay. So let's move on to the next one. Lakshmi Mills is a profit-making entity. Reported profit of 200 crores in the financial year X1, X2. According to its profit sharing plan, it distributes and pays 5% as the portion of profit to its employees if they complete 1 year within the organization. Under this plan, an entity is under an obligation to pay if the employees complete the specified period. Lakshmi Mills has estimated that due to staff turnover, estimated payout would be around 4.5%. Compute the liability and expense under this plan. So what is it? Very simple. 200 into 4.5%. So that comes to 9 crores. Sir, 5% क्यों नहीं लेंगे? 5% is total. But considering people who are leaving, who will not be entitled, it should be taken as 4.5%. So that is 9 crores. Have you understood this?
Yes, sir.
Very simple. So coming to the next one, illustration 8. Acer Limited has 350 employees, same as a year ago. The average staff attrition rate is 6% per annum. Provides these benefits. One is annual bonus during past 10 years. Acer paid bonus to all employees who were in the service during the entire financial year. Bonus was paid in June following the year end. Amount of bonus for X1, X2 paid in June 20X2 represented 1,25,000 per employee. Acer used to increase the amount of bonus based on official inflation rate, which is 8.5% for 20X2X3. Although there was no legal obligation to increase the bonus by such inflation rate. How would Acer recognize liabilities and expenses? Yes. How would it recognize liabilities and expenses for these employee benefits? So first one, how many employees can get the bonus?
94%.
94%.
329.
That is 329. 329 employees. Multiplied by. What is the bonus that they will get?
1,25,000 into 8.5%.
Inflation.
1.085. Is it correct?
Yes.
Yes, sir.
So 1,25,000, 1.085. So that's it. That is your answer. So this comes to 4 crore 46 lakh 20,625. So entry will be employee benefit expenses account debit to provision for bonus 4.46 crores. Okay.
Yes, sir.
Very, very simple. Okay, bus. और क्या हो गया? We are done with the first part. We are done with the first part, that is short-term employee benefits. So if you look at this table, it summarizes recognition and measurement. You recognize as a liability. We have done in our questions. Recognize as an asset. Okay, okay, this we will see later. Okay. Recognize as an expense if not forming part of cost of asset. Okay. Short-term absences, accumulating, non-accumulating, vesting, non-vesting we have seen. Obligation booked as an additional amount, that also we saw. Non-accumulating, no liability recognized until the time of expense. Absence, that also we saw. Coming to profit sharing and bonus conditions, present legal or constructive obligation, and a reliable estimate can be made, recognized as expense and not booking the profits. Disclosures, no specific disclosure under Ind AS 19, but other standards may require the disclosure. Are we okay with short-term benefits? Yes, because now we come to post-employment benefits. And this is where things start to get slightly tricky, not complicated. Okay, slightly tricky. Okay. We take a break so that you can also get fresh, and then we shall study this and try to finish a major chunk today. So tomorrow we can do a lot of questions. Is it okay with everyone?
Yes, sir.
Yes, we take a break now and we shall resume in 10 minutes. Sir, break. So we start the next one, that is post-employment benefits. In your examination, it is this very section that is extremely important, okay, for your examination perspective. Okay, so now so what do I mean by post-employment benefits? These are the benefits that will be paid after the end of the employment. We'll not use the word termination of employment because termination signifies an act that has come in from the entity's side. So post-employment means retirement or resignation or superannuation, whatever you name it, whatever you call it. So that is the meaning of post-employment benefits. These are broadly categorized into two types. One is a defined contribution plan and one is a defined benefit plan. Defined contribution and defined benefit. The green table of contribution is put as green because this is the simpler one. This is something which you don't have to really put in much of your mental activity. It's a normal monthly activity that keeps happening. Defined benefit plan is where all the complexities lie. So what do we mean by defined contribution plan? It is a plan under which you make a contribution to a fund and your story is over. You don't have to do anything else. On the other hand, a defined benefit plan is defined as any plan other than contribution plan. Very nice. So if there is any plan which does not meet the requirements of definition of defined contribution plan, that is your defined benefit plan. So, provident fund, for example, an entity, is it obligated to pay the returns to the employee, or is the entity's obligation closed when it makes the contribution to the fund? Obviously, the obligation is over when the contribution is made to the fund. Have you understood? Yes. So, uske baad, how much the fund earns, how much the fund gives back to the employee. What if the investments fall in terms of pricing? What if the markets get volatile? In all these cases, you tell me, for a provident fund, the risk is upon whom? The risk is upon whom?
Fund.
Employer.
Upon the
Fund, sir.
हाँ, but ultimately fund का beneficiary कौन है?
Employee.
Employee. So all these risks, what I just now said, ultimately are with the employee, not with the employer. Employer का काम is very simple. I contribute to the fund. उसके बाद whatever you do does not affect me as an entity because my job is done. So contribution, I mean accounting is very simple. There is no actuarial assumption, etc. Whatever is the monthly contribution, you accrue it and then you make the payment. There is no need to do any discounting or calculate any actuarial assumptions. Okay. Coming to defined benefit plans. Now, in defined benefit plans, look at the words defined benefit. That means you have entered into a contract with an employee and you have defined a particular benefit that will be paid. You have probably computed a formula for paying that benefit. You have probably calculated a manner in which you are paying the benefit. You have computed, you have given a lump sum that will be paid to that employee. Okay. In all these cases, who is obligated? Is it the employee or the employer?
Employer.
And is this obligation like the first case where the employer puts the money in the fund and finishes off, or is the risk on the employer for delivering the amount in line with the plan that has been agreed upon?
Risk is
of
also there
employment.
with employer, sir.
Risk is only with the employer. Employee बोलेगा I need my money back in line with what is agreed. So I need my money back, and that is why I am not going to worry about it. You are the one who has to worry, because you have to ensure you have the money to pay me when I retire or resign. Okay. Now, because of this, the defined benefit accounting plan accounting is extremely complex, extremely complex. There will be actuarial assumptions. There will be a discounting. How to do that? All of this is a little complicated. For that, we will look at this when it comes. Okay. So, examples are given where entity's obligation is not limited to the amount it agrees to contribute to the fund, like a plan benefit formula, which is not linked solely to the amount of contributions and requires entity to contribute if the assets are insufficient to meet the benefits in the plan formula. You are putting money in the fund, but if it is inadequately funded, मतलब आपने sufficiently assets नहीं create करे, then you as the employer only has to put in more money in the fund to meet the obligation. So though there is a fund, it's dependent on the employer entity itself, and therefore this may appear to be a contribution, but obligation is more than the contribution. Or a guarantee, there is an obligation through a guarantee of a specified return on contributions, or there is an informal practice, that is a constructive obligation. So these are cases where your obligation is not limited to the amount it agrees to contribute. Okay, so coming to the next one. A company, you can go through this illustration. A company pays each employee a lump sum one-time benefit upon retirement. Lump sum one-time benefit upon retirement. The benefit is computed based on employee's years in service and the final salary prior to retirement. To cover its liabilities from this remuneration, the company contributes 3% of gross salaries to the fund. Would this obligation represent a defined contribution plan or a defined benefit plan, and why? Bolo, defined benefit or defined contribution?
Benefit plan, sir.
Defined benefit. Yes, defined benefit. What about Nisha? Are you or it was Nisha only? I think this was Anila, Kishore, Hemant has answered, Monica, Jeannie also has answered. Okay, fine. Pooja, yes. All right. Stephen is also there. Okay, so defined benefit plan. It's a defined benefit plan. Okay. Why is it defined? Because ultimately the agreed sum that has to be paid is a lump sum benefit, and they have given the manner of calculation. You are putting your money in a fund that is to probably ensure you have some cash to make this payment in the future. But what is critical is depositing the money in that particular fund. That is absolutely critical. Okay. It is a defined benefit plan. Contributing to the fund is your strategy. Okay. All right. In accordance with applicable legislation, company contributes 12% and employees contribute 12% of annual gross salaries to the Provident and Pension Fund. Upon retirement, the employees will get the accumulated balance that is calculated based on employees' years of service and his average salary for the past 15 years before retirement. The pension will be paid out of the state fund assets, and the company has no further obligation except to make contributions. Would this obligation represent a defined contribution plan or a defined benefit plan?
Contribution plan.
Right. Because this is the word. The pension paid out of the state fund assets, entity has no further obligation. So that takes care of these two questions. Okay. These you can read it for homework. Okay. It's only theory. It's there in the standard. That is why it has come here. Okay. We can look at that later tomorrow if time permits. Okay. All right. Paras does not have sufficient information about a defined benefit plan and thus accounts Okay. We'll see this question later along with that. Okay. So go through this for homework. Go through this for homework. These are not there are no questions based on this. Okay. So go through this for homework. State plans also you can refer. Insured benefits also you can refer. All right. Now, accounting for defined contribution plans.
सर सर एक्चुअली आप एक फेवर और कर सकते हैं, ये जो आप होमवर्क असाइन करते हैं तो ये
Yes.
शीट ही आप अपलोड करवाइएगा ना, क्योंकि आपने जब लास्ट अपलोड
है,
करवाई
ठीक
थी
है।
तो वहां पे होमवर्क मेंशन नहीं होता, तो वापस वीडियो देखकर वापस होमवर्क
अच्छा
देखना
ठीक है, ठीक है, मैं एक काम करता हूँ, सेशन के बाद मैं फिर से ये ये शीट अपलोड कर दूंगा, ठीक है।
ओके
वो
सर।
यू कैन रेफर दिस परफेक्टली, पॉइंट वेल टेकन, थैंक यू। ऑल राइट, नेक्स्ट, accounting for defined contribution plans. So it's a straightforward accounting. I don't have to explain to you. You are all trained people in that. Obligation for each period is determined by amount to be contributed. Assumptions, actuarial assumptions are not required. Because there is no actuarial assumptions, no possibility of actuarial gain or loss. Account it on an undiscounted basis. Okay. Exception not expected to be settled within 12 months, then you will have to discount it. But typically, ये सब ना 12 months के अंदर ही we do the settlement. So entry will be employee benefit expense or asset if it is pertaining to the reporting period. If you are paying it in advance, then prepaid expenses to cash bank or to liability. Disclose amount recognized as an expense for defined contribution plans. That is one disclosure. Disclose contribution to defined contribution plans for key management personnel under Ind AS 24. So that is something that we will have to do. Okay. Now coming to the next one, that is illustration 11, page. This is TCAT. Acer Limited provides lump sum remuneration upon retirement to its employees. Remuneration is paid out of the fund to which the Acer Limited contributes 12% of the gross salaries. Contributions are made twice a year, that is in November of the related financial year and in June after the year end. Total annual gross salaries amounted to 50 crores. Contribution made by Acer was 2.8 crores. Remuneration depends on the number of employee service and amount of cash in the fund at retirement date. Acer has no further obligations except for the contributions. How should this transaction appear in the financial statements of Acer? So total contribution is 50 crores into 12%. So that will be 6 crores. Out of 6 crores, 2.8 crores is something that we have already paid, right? Contribution made by Acer was 2.8. So we are left with 3.2 crores. So we will have to make a provision for additional 3.2 crores. So your entry will be employee benefit expense account debit 6 crores, to bank 2.8 crores, to contribution payable 3.2 crores. Are we able to understand?
Yes, sir.
Yes, कुछ है नहीं इसमें, nothing difficult. Okay, all right, fine. What I want you to do is, whatever questions we have done till now, this is a summary of all that. See, Cisca has a headcount of 1,000 employees. The leave policy is 35 days privilege, 15 days sick leave, 10 days casual. Out of this, these many days of privilege, these many sick leaves carried forward. Is this similar to one question that we already did? This first paragraph? Yes.
Yes, sir.
Second paragraph, incurring profits. Decided to distribute profits at 4%, but due to turnover, it expected to be 3.5%. Is it similar to what we did? That Lakshmi
Yes, sir.
5%, 3.5. So ये सबका summary है. So this is my second question that we did. Post-employment benefit plan also available. Nature of defined contribution plan. Contribution to the fund amounts to 100 crores, which will fall due within 12 months. Okay. Company has paid 20 crores to its employees in 2080x1. What would be the treatment of the short-term compensating absences, profit sharing plan, and the defined contribution plan in the books of Cisca Private Limited? So very simple. So I want you to try this for your homework. Okay, it's a summary, it's a cumulative total of whatever we have done so far. Okay. And now we come to the heart of this standard, that is defined benefit plans. Did you understand defined contribution plan? Yes, everyone? Okay.
Yes, sir.
Now, coming to defined benefit plans. We will start with an example, okay? And then we will look at what are the possible scenarios that arise. And then let us try to understand कि इससे होगा क्या? What is exactly going to happen because of this, okay? And why it is complicated. So let us assume I have an employee who joins an entity on 1st April 2016. And he's expected to retire on 31st March 2050. That means I think he will work for a period of 34 years with us. 2019-20 is my reporting period. 2019-20 is my reporting period. हम तभी report करेंगे. Now, what is the problems or what are the typical things that we face? I am reporting for 2019-20. Okay. So 19-20 में that person is doing the work for 1 year. Okay, so uska regular salary, short-term benefits and all to get accounted. But now I need to account for gratuity. I need to account for pension, whatever is there in line with the employment terms, which I will be paying after this period. Which I will be paying after this 31st March 2050. But now if I have to count that, the first question that will come, is he going to be with us for 34 years? Yes or no? Is it a certainty or is it an uncertainty?
Uncertainty.
Uncertainty.
Uncertainty. Yes. Will he live? Will he stay with the organization for 34 years? उसको sophisticated language में हम बोलते हैं labor attrition. अच्छा, दूसरा question. Will he be alive after 34 years? Yes. Can I predict my life? Can I predict?
No, sir.
No, sir. नहीं होता तो कितना अच्छा होता, right? तो will he live for 34 years? Standard के sophistication में बोलते हैं mortality. Yes, we call it as mortality. Another uncertainty. Will the employee be physically fit to serve during this 34 years? He loses his hearing, he loses his sight, or he may have some physical, what you can say, some physical challenges may come. Okay, he may have a broken hand or a broken leg or something, anything can happen. Okay, anything can happen in 34 years. So we call it as disability. Okay, we call it as disability. Achha. Will the salary that I pay him here be the same as the salary that will be paid here?
No.
तब तो वो कतई नहीं रहेगा आपके साथ. If you are paying him the same salary after 34 years, what you are paying him now, वो 2-3 साल में निकल जाएगा. So benefits won't be the same. Benefits कितना हो सकता है? Can you decide that today? Yes. Can you say with absolute certainty, I'm going to give him so much salary at the time of his retirement? नहीं बोल सकते. It's dependent on the market rates. Okay. So benefit levels borne by the company plus future salary increase, uncertain. Payment is happening in 2050. That means after 30 years. But accounting आज हो रहा है. Can I use that rate accounting in the current period?
No.
I have to bring it to the present value. उसके लिए हमको चाहिए discount rate. Yes. कौन सा होगा मेरा discount rate? Yes or no?
Yes, sir.
And I assume he will retire in 31st March 50, but I should have cash also. So that cash, I will put it in some assets, and those assets are giving me some income, and that income will be subjected to income tax. So can I estimate that with certainty? Answer is again no. भाई मुझे क्या पता कौन कितना देगा? Yes. Various other estimates to be made, which is discussed later. Which is discussed later. So are you able to understand the complexities that are there? Yes.
Yes, sir.
What is certain in this particular scenario?
Payment of benefits.
पेमेंट करना पड़ेगा ये.
हाँ, बस वही एक सर्टन है. पेमेंट अमाउंट कितना होगा, कैसे होगा, क्या होगा? Can I pinpoint it with certainty? Answer is no.
Sir, point number, last point, tax payable on income earned by
Yes.
the plan asset.
Yes.
But sir, ये तो certain होता है, like 30 या 40%, like जो corporates पे tax लगते हैं और planned assets पे लगेगा, right?
अच्छा, मैं एक सवाल पूछता हूँ. हमारी फाइनेंस मिनिस्टर ने अभी लॉन्ग टर्म कैपिटल गेन्स पे जो टैक्स लगाया 2 साल पहले सर्टन था ये?
No, sir.
नहीं, तो बस हो गया ना. किसको क्या पता यहाँ क्या होने वाला है, राइट? Who knows
Okay,
what will happen? Yes, 30
okay,
plus
sir.
60 भी हो सकता है, 10 भी हो सकता है, 15 भी हो सकता है. So my point is basically that in this defined benefit plans, we are navigating only through uncertainties. Nothing is certain here. Okay. Which is what makes this accounting extremely complex. Okay. So we have to navigate through these uncertainties, take the help of certain experts, make some assumptions, and calculate the liability. I cannot sit back and say 30 साल बाद देना, मुझे क्या पता? I don't even know whether I will exist for 30 years. So why should I do the accounting? We cannot take such kind of stands. Okay. So let us proceed further. So now you know the uncertainties involved. Okay. All right. Now, one small illustration. A large IT company accounts for gratuity on payment basis and supports the policy by making the following disclosure. Due to high labor turnover, a large degree of uncertainty is involved in estimating the gratuity liability. Accordingly, the management opines that the estimates of uncertainty would confuse the readers by complicating the financial statements, and hence the liability would be recorded on a payment basis. Management says that by making these disclosures, it is complying with all the requirements of the Ind AS, as a disclosure is given. The management is also wishing to highlight this fact by making it conspicuous. मतलब वो visible करेगा, bold करेगा, underline करेगा, maybe उसको highlight करेगा, so that attention is drawn. Is the contention of management correct as per provisions of Ind AS? बोलो.
No, sir.
Not at all. Disclosure is not a remedy for non-compliance. Okay. In extremely rare circumstances, you are permitted to depart. You are permitted to depart. But this is not an extremely rare circumstance. Just because you are in an industry where attrition is very high, that does not absolve you from the fact that you have to accrue a gratuity or a leave encashment provision as the case may be. Are you able to understand? Yes.
Yes,
So
sir.
therefore, the contention of the company is not right. Okay, fine. So now we come to accounting for defined benefit plans. I have two things in front of me. Either I run you through the theory, जो कि बहुत बड़ा है, or I run you through a question,
Practical way.
Practical.
समझ में भी आ जाएगा, and then I run you through the theory, then you will only start running. Okay, you will be able to understand what I'm talking about. Okay, so I think I will do the second option. Okay, this question is very simple. It is basically to help you understand the concept of how do I do the build up. Okay, of how do I do the build up. Okay, all right. Not this one, not this one, not this one. This is the one. Okay, all right. Fine. Acer Limited hired a professional in April 2017 for 6 years of service, which would terminate in March 2023. Okay, so 6 years. That means greater than 1 year, so definitely. Okay. Apart from regular salary and annual bonus, Acer will pay a lump sum remuneration of 45 lakhs to her upon termination of employment. Okay. Discount rate used for actuarial valuations is 10% per year. Show how this obligation builds up over the employee's service. Ignore other actuarial assumptions other than the presented discount rate. Okay, fine. So now, she is getting how many things? She is getting 3 things from her employment. One is the regular salary. One is the annual bonus. And third is the lump sum remuneration. Are we okay with this? We are dealing with accounting for the lump sum remuneration. You tell me, is this a defined benefit plan or is this a defined contribution plan?
Benefit plan.
Benefit plan.
Benefit plan.
Why do you say benefit? Because the obligation to pay 45 lakhs rests upon the employer. Okay, good. Hemant and girls also have responded. Obligation to pay rests on the employer. Employer bolega, if I get 45 lakhs, I don't have any complaint. If you don't give me 45 lakhs, I will take you to the court. Yes, so 45 lakhs is the regular, what you can say is the regular benefit, a lump sum that is being paid. Obligation is on the entity. So 45 lakhs, I know that I have to pay. All right. Now, let us look at the build-up. Let us look at the build-up. I could solve it, but it's time that is stopping me. Okay, so that's why I leave it. I will prefer to run you through the solutions. Okay. Is this 45 lakhs arising at the end of 6 years, or is it a gradual accrual that happens?
Accrual.
Gradually accrual.
Gradual accrual. You cannot say that suddenly 6th year वो liability आपके सामने प्रकट होके खड़ा हो गया कि भाई दे दो 45 lakhs इनको. You know you have to pay 45 lakhs at the start of the year. So therefore you have to gradually accrue. How am I going to accrue? Equally. So 7,50,000 each year. कैसे है 7,50,000? 45 lakh divided by 6. So 750 each year is the accrual that you will have to do. But wait a minute. Is this amount getting paid after 1 year or within 1 year?
After 1 year.
Beyond 12 months. Beyond 12 months. That's right. So when it is paid beyond 12 months, 45 lakh that has to be paid in the 6th year is not equal to 45 lakhs today. Will it be higher or lower?
Lower.
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 I have to discount it. I will have to discount it. So हम discount करेंगे. हम discount करेंगे. Okay. So 1st April 17, she starts her work. 2018 March has come. I have to account for the obligation. So do I have any opening obligation? Answer is no. So on the opening obligation, will there be any interest at 10%? Answer is no. So 0 into 10% is 0. Now, I have to book the obligation of 7,50,000 discounted to the present value. Yes, discounted to the present value. What will be the discounting rate? 10%. But for how many years? 5
6
years
years.
or 6 years? सोच के जवाब दो. Think and answer.
5 years.
5 years. It's not 6. Because 1 year तो madam has worked. Yes. 1 साल बीत गया. So 18 to 19 is 1, 2, 3, 4, 5. So discounting 50. Yes. 0.6209. Are we okay with this?
Yes, sir.
Yes, everyone. Hemant, did you understand? Yes, all right. Perfect. Perfect. Okay. Now, Then the discount rates become mechanical. Fourth year, third year, second year, 1 year, and 0. Is it okay? Yes. All right. So I did an accrual of 4,65,691 multiplied by 7,50,000. Are you able to follow? Yes. Everyone?
Yes, sir.
Did you follow? Okay. So 7,50,000 into 0.6209 is giving you 4,65,691 as the first year accrual. This will be the opening balance at the beginning of the second year. On that, there will be an unwinding of discount. When I say interest, I mean unwinding of discount. Have you done unwinding of discount somewhere else? Yes? I'm not able to listen.
Lease, sir.
Okay. Yes. You would have done it. Hemant, did you not understand? I saw some no. You didn't understand? Okay, fine. All right. See, this employee has completed 1 year of service. Okay. Because she has completed 1 year of service, I have to accrue a cost of 1 year towards that lump sum remuneration. Okay. Because she has worked for 1 year, I have to accrue the cost of that 1 year. Okay. Let me note it down. Okay. She has served for 1 year out of the total period of 6 years. So if she has served for 1 year, do I have to book the cost of this 1 year salary? Hemant, can you answer? Yes. Now, when is this going to be paid? Sir, it will be paid here at the end of the 6th year. Okay. So if I'm paying at the end of 6th year, how much am I going to accrue? Sir, 7,50,000 is the equal value that you have to accrue, 7,50,000. Sir, 7,50,000 should be paid after 6th year, at the end of the 6th year. Are you able to understand this, Hemant? Yes, this is the value. This is the final value. Okay, 7,50,000. Okay. So for this 1 year, 7,50,000 has to be accrued. But I cannot accrue 7,50,000 directly because the payment has to happen after 5 years. From end of year 1 till end of year 6. This period is 5 years. This period is 5 years. So I cannot directly accrue 7,50,000. I will have to bring it to the present value. And that is why, what will be the present value factor? Present value factor 10% for how many years? 5 or 6? Sir, it will be 5 years. Absolutely right. So 0.6209 is what you are going to do the discounting with. So 7,50,000 into 0.6209. So that comes to 4,65,000, whatever that figure is. Okay, 691 probably. Okay. Have you understood this, Hemant? Yes. So 4,65,000 I have accrued. Now this will become the opening balance of next year. Why? It is a rolling accrual, right? So today's closing will be tomorrow's opening. So we do the accrual of the compound of the interest thereon, 46,569. Then from here to here, it is a period of 4 years. So discounting rate will be present value factor at 10% for the 4th year. So 0.683. So that comes to 5,12,260. Like that, if you go on doing, then at the end, you will be having present value of benefit attributable 7,50,000. Are you able to follow? Yes, everyone, are you able to follow? Yes, Jeannie has confirmed. Hemant, did you follow? Okay, no problem, no problem. Pooja, okay, all good. Hemant will come to that interest expense and all. Okay, right now, understand the build up. So this 45 lakh build up is happening because of two things. One is accrual on an annual basis, which is at the discounted values. This is the accrual. Additionally, due to this unwinding of discount. These are the two things which are contributing to your build up of 45 lakhs. Is it okay? Everyone also understands that. This is the annual accrual fashion. So now when I have to do the accounting, sir, very simple accounting. Debit employee benefit year 1, 4,65,000. Credit provision for employee benefit 4,65,000. That is first year. Sir, interest first year mein there is no interest. Sir, why? Because opening balance to tha nahi na. It is the first year of obligation. So no opening interest. No interest on opening balance. So current obligation 4,65,691. Second year 5,12,260 is your build up. Interest unwinding is 46,569. So the provision for employee benefits will be credited with 5,58,829. A common question that comes here is, sir, do I need to show this interest as finance cost in the financials? No, it's part of employee expenses itself. It's part of employee benefit expenses itself. So 5,63,000, 1,02,000, 6,65,000, so on and so forth. You will do these entries till the last year. Are you able to understand? Yes, are you able to understand? Jeannie, did you follow? Hemant has confirmed. Pooja also appears to have confirmed. Monica, समझ में आ गया? Yes, Nisha, I hope you understood.
सर हम इसको ये कह सकते हैं कि हमने हर साल 7.5 लाख रुपए की इक्विवेलेंट एफडी करवा रखी है, राइट?
एफडी नहीं करवा रखी है, हम उसको लायबिलिटी के तौर पे बुक कर रहे हैं. बट
हाँ,
ठीक है,
बट
एंड ऑफ द डे जो आप बोल रहे हो वो सही है. यस.
बट सर, जो इंटरेस्ट कॉस्ट जो हम यहाँ पर हमारी डेबिट कर रहे हैं, वो हमने भी कहीं ना कहीं इसको जो डिस्काउंटिंग फैक्टर है जो 10% हम ले रहे हैं, वो इंटरेस्ट कॉस्ट हमने कहीं ना कहीं इन्वेस्ट कर रखा होगा, राइट?
तो आप दोनों चीजों को फिलहाल मिक्स मत कीजिए. ओके.
ओके सर.
इन्वेस्टमेंट जो पार्ट है दैट ब्रिंग्स अदर कॉम्प्लिकेशंस, मैं उस पे अलग से बात करूंगा. यहाँ पे कोई इन्वेस्टमेंट नहीं है, यहाँ पे इट इज जस्ट अ कॉस्ट एक्रूवल. ठीक है
सर, बस मेरा इंटरेस्ट पे ध्यान गया था, इसलिए जस्ट ये क्वेश्चन किया कि
बात
इंटरेस्ट
सही है,
का
बिल्कुल सही है. आगे जाके सवाल आएंगे जहां पे आपका प्लान एसेट्स में इन्वेस्टमेंट होगा, तो वहां पे मुझे इनकम भी मिलेगी इस पे. तो जैसे यहाँ पे मेरा कंट्रीब्यूशन इज 4,65,000 फर्स्ट ईयर, मैं इतने का एफडी बनाऊंगा, उस एफडी पे इंटरेस्ट मिलेगा. उसका इंटरेस्ट अकाउंटिंग कैसे होगा, उस एफडी का फेयर वैल्यूएशन कैसे होगा, दिस विल कम लेटर. मैं
ओके
चीजों
सर.
को I'll not mix it up, it will complicate things. And then finally we will round it off with a very grand summary question that has been part of your RTPs and it has come. That time the whole process will be crystal clear. Okay, but right now I'm just focusing on building up of the liabilities.
तो
ठीक है,
ये वाला इंटरेस्ट जो है वो हमारा पार्ट ऑफ द कॉस्ट होगा,
ये
राइट?
आपका कॉस्ट है. दिस इज योर कॉस्ट. ओके, फॉर नाउ दिस इज योर कॉस्ट. तो इसके
ओके सर.
लिए डेबिट. ओके, सो फिलहाल आई हैव ओनली बिल्ट अप दिस कॉस्ट टू 45 lakhs. एवरीबडी इज क्लियर अबाउट इट. ठीक है, Kishore, hope it's clear. Rest all, hope it's clear. All right, Hemant also, it's clear. So if I look at the presentation, okay, 7,50,000 every year, इसका equivalent मैंने accrue किया है. Is it correct? I have accrued an equivalent of 7,50,000 each year. Is it clear to everyone?
Yes, sir.
So इसको हम लोग बोलते हैं unit of benefit. We call it as unit of benefit. Okay. When I discount it to the present value, see, you remember 4,65,000, 5,12,000, 5,63,000. These are nothing but the discounted values. ये वाला figures. Okay. Same figures is what I am actually taking the hit in my P&L. उसको हम लोग बोलते हैं current service cost. We call it as the current service cost. My employee has worked in the current year, and that work that she has given me is entitling her to 1 unit of benefit. That 1 unit of benefit is 7,50,000 in the future value terms. In the current value terms, it is 4,65,000 for the first year. That is why I call it as the current service cost. Did you understand? Yes. In the second year, my employee is getting entitled to another unit of benefit, जिसका value है 7,50,000. But in today's terms, it is worth 5,12,260. So the current service cost for year 2 is 5,12,260. And additionally, I have an unwinding of discount amounting to 46,569. Are we able to understand now? Yes.
Yes, sir.
Did you understand? So my current service cost is nothing but the discounted value of the unit of benefit. Yes. My current service cost is nothing but the discounted value of the unit of benefit that I have apportioned. So 1920, 5,63,000 ऐसे करते करते till the last year, जहां पे end of the year में I have to accrue so that there won't be any discounting. It will be 7,50,000 itself. Then year on year, I am having an interest cost that is coming. So when I take these totals, I will be having the closing obligations at the end of each year with a buildup of 45 lakhs towards the end. Any doubt so far? Anybody has any doubt so far? Jeannie, did you follow? Monica, samajh mein aa gaya, I think so. Pooja also would have followed. Okay. All right. Now, let us come to the theory. Okay. Let us come to the theory. So what is the first thing I have to do? I have to compute the ultimate cost of benefit to the entity. In my question, what is the ultimate cost of benefit to the entity?
45 lakhs.
45 lakhs. My ultimate cost of benefit to the entity was 45 lakhs. Sir, the question was simple because this was a lump sum payment that was determined at the beginning of the year. But let us consider something like gratuity. Now, how is my gratuity calculated? 15 days salary based on the last salary drawn for the number of years served. So it will be 15 days salary multiplied by last drawn salary multiplied by number of years of service. Sir, plan is not necessary that it gives a lump sum payment. Plan can also be based on the plan formula. Gratuity is nothing but a plan formula, right? So plan formula ke hisab se, this is the payout that should go to him. Now you tell me, suppose you have 100 employees in your company. Will the answer be the same for each employee?
No, sir.
Cannot even happen. Okay. So there are multiple variables. I don't know the final salaries. I don't know the turnover or mortality. I don't know what is the trend of medical cost. I don't know the other variables. The earnings I'm going to get on plan assets, I really don't know. So multiple variables. And I cannot estimate any of this easily. Okay, as due to uncertainty. And it is payable usually after several years with the transaction horizon extending to a few decades. Decade ही तो था 2020 से 2050, 30 years. 30 years is nothing but 3 decades. So 3 decades का payment you want to estimate it in today's terms. करो फिर बैठ के, you have to do it. Yes. So the objective is accounting for these benefits as they accrue, with the impact of uncertainties in the amounts impacted. So how do we achieve this? We apply an actuarial valuation method. We attribute benefits to the periods of service and we make actuarial assumptions. We have done all these 3 things in that question that we just now saw. We have applied an actuarial valuation method. Sir, हमने किया है, हमको पता भी नहीं चला है ना. The first thing that you did, 45 lakh divided by 6. That is the unit of benefit which you calculated. That itself is your valuation method. Okay. Projected unit credit method. That is exactly what we have done in the question that we did. Only the name is big, but the output is what we just now saw. Attribute benefit to the periods of service. आपने किया ना 6 साल में हर साल 1 year you have done the attribution to the periods of benefit. And you made assumptions. था ना assumption 10% discount rate. Question only said do not make any other actuarial assumption. So 10% discount rate, we made the assumption and we did the question. Is it okay? Yes. So first you have understood computing the ultimate cost of benefit to the entity. Now we further build upon this. Actuarial valuation method is usage of projected unit credit method. Projected मतलब future. Unit मतलब 1 year's cost कितना है. The cost per annum, what we are determining on the undiscounted amount. That becomes my unit. And since each year I am building it up, there is a credit each year. So projected is future, unit is per year. I am increasing the provision, I am crediting the provision. So projected unit credit method. That is very simple. उसको हम लोग बोलते हैं POCM. POCM. Otherwise उसका नाम क्या है? Also known as accrued benefit prorated on service or benefit divided by years of service method. किया तो वही है हमने. Benefit was 45 lakhs divided by 6 years, 7,50,000 becomes my unit. And each year I credit it. So therefore, ये नाम है projected unit credit method का. Are we okay with this? Yes. Now, why do I have to do this method? One is to determine present value of defined benefit obligations. 4,65,691 at the end of year 1. Accrual for year 2, 5,12,260. These are nothing but present value of the obligations. So I need to determine that. At the end of year 1, 4,65,000 was the present value of defined benefit obligation. Related service cost, 4,65,000, 5,12,000, 6,18,000, 7,50,000. These are all my current service cost. And past service cost where applicable, we will see that later. But past service cost also will come here. Okay. So what is the understanding? Sir, each period of service gives rise to additional unit of benefit entitlement. My lady has worked for the organization for the first year. She is entitled to 7,50,000. That is 1 unit. She worked for second year. She is entitled to an additional 1 unit. That is totally 2 units. That is additional 7,50,000. That is totally it is 15 lakhs. Are you able to understand? Yes. And it measures each unit separately to build up the final obligation. Obviously, we are measuring each unit separately, applying discounting factor only to that unit. and then accruing the interest on the opening balances. So each unit is measured separate. Are you able to understand? Yes. So I have suppose 10 years. Then each year will become one unit. Then I will have to do a discounting to the present. Yes, discounting to the present value. Are we able to understand? Yes. Yes. Okay. So now, how do I attribute the benefits of service? In that case, 7,50,000 per annum, I attributed it on a straight line basis over the period of service, giving rise to material benefits. But I have attributed benefits to the period of service also in line with the benefit plan formula. In line with the benefit plan formula. उस हिसाब से भी आप कर सकते. Is it okay? Yes. And you will have to discount this even if the part of obligation is within 12 months of the balance sheet date. Part of the obligation is talking about, not the whole. Okay. All right. Did you understand this? Yes. Anybody has any doubt so far? Yes, that's right. That's right. Okay. Practical में वो simple था because that was a simple question. Okay. All right. Part of the obligation. Even if part of the obligation is due within 12 months. Okay. All right. Fine. Let us then proceed further. See, you don't have to really remember this theory. Okay. Theory is there because standard is worded like this. Standard is worded like this because the topic itself is complex. That is why you are learning this so that you can make other people's job easier in the future. Okay. So let us move further. Attributing benefits to the periods of service either in line with the plan formula or on a straight line basis. Okay. What is the objective? To determine present value of defined benefit obligations, to determine current service cost, and to determine past service cost where applicable. Where applicable. Is it okay? All right. So बाकी सब तो इतना कुछ खास नहीं है. So what I want you to do is you can either go through this question 3, 4, 5, 6, or I have given the similar illustrations which is there in the study module for this. You can go through this for homework. It's only talking about the various accruals that we can do. The various accruals that will happen for all scenarios possible. Okay. You can read that and just understand it from an examples perspective. Okay, just understand it from an examples perspective. Okay, do this also for homework. These are all just certain theories which are there, nothing specific for me to explain at this point of time. Okay, I have explained the theory already. Okay, all right. Question 8. This is something similar to illustration 22. Just read this question, please. I will be coming short. Okay, I'll just come in. Okay, all right. So now let us look at this question. An entity has 1000 employees. As per statutory requirements, gratuity shall be payable to an employee on the termination of his employment after he has rendered continuous service for not less than 5 years, either on his superannuation or on his retirement or resignation or on his death or disablement due to accident or disease. The completion of continuous service of 5 years shall not be necessary where termination is due to death or disablement. Amount payable is determined by a formula linked to the number of years of service and last drawn salary. As per the law, the amount payable shall not exceed 20 lakhs. How will the entity attribute the gratuity over the period of service? Yes. So first one, how will we attribute the gratuity? First one, the number of employees who are unlikely to fulfill the obligation, we will ignore them. Okay. Like, for example, employees who have not yet completed 5 years and they have already put in the resignations and they are serving their notice period. इनको तो gratuity मिलेगी ही नहीं. So therefore you can exclude them from the obligation workings. Okay. Other employees you will group according to the period of service they are expected to render. So some people, like if you look at your organization chart, typically the top level employees, top level when I talk about, it means the directors, executive directors. These typically, they normally are in service for 5 and more years because then only they can reach that stature. So typically those people, they would do a meaningful contribution. Somebody who is there, as if it is a startup who has assisted in building up the company, typically they will also exist for a period of 5 years. Okay, so like that you will have to estimate. Not only that, you have to also take into factor things like you have to also take things into account, factors such as mortality rate, disablement, and resignation. So if somebody is very highly qualified, somebody is brilliant in his job, somebody has an exceptional IQ and understanding, then he will not stay with you for 5 years. He will learn whatever he has to learn, or she will learn whatever she has to learn, and she will move to the next job. So in all such cases, you have to keep in mind the trends which are there in the current times. Acha, in the HR form, we fill certain things, right? So things like, what is your weight? What is your family history of diseases? Do you have any of those diseases such as heart problem, this problem, that problem? So all these things are fed. So is it critical to feed them? Answer is yes. Uska yahi kaam hai. Those things what they take, and then they do a medical test for each of these employees. So do you think the medical test is just to certify your fit? Answer is no. Ideally, those medical test results also should go to the actuary, so that when he is going to estimate how many years you will live in the organization, your disabilities, your mortalities, all of that will be the basis for estimating. Actuaries is a very statistical method of doing the calculation, a very statistical and scientific method of doing the calculation. The more details you give, the more, I won't say accurate, because you cannot do an accuracy for something that is supposed to happen after decades, but it will be realistic. It will be realistic. Suppose you resign, somebody else of your similar stature is going to come into this organization. So the estimates will not vary much. Are we able to follow? Yes. So you will take that into account. Then you will have to estimate the future salary increases. You will have to estimate the future promotions. You will have to estimate the governing statute along with any probable changes in doing the calculation. Okay. Are you able to follow? So these 4-5 things you will have to ascertain. These 4-5 things you will have to ascertain and do the attribution of service. Any doubts so far? Question 9 is done. Any doubts? No doubts? Sub clear ho gaya. Yes? All right. Jeannie also, hope everything is clear. Okay. Now, coming to actuarial assumptions. भाई होते क्या है ये actuarial assumptions? Starting से लेके अभी तक हमने we have heard this word at least 5 to 6 times. What is actuarial assumptions? All those variables I discussed, mortality, disablement, attrition, all these things put together are the various variables that are affecting this particular obligation. So the actuarial assumptions are basically the entity's best estimates of variables that will determine the ultimate cost of providing post-employment benefits. So best estimate of variables. Okay. So whatever variability is there in your, whatever variability is there surrounding these factors, the best estimate of that is known as actuarial assumptions. These estimates only are giving me the ultimate cost of providing the post-employment benefits. Okay. So when I talk about assumptions, they are broadly categorized into 2 types. One is demographic assumptions and the other is financial assumptions. Okay. Now, what do we mean by demographic assumptions? Sir, mortality rates. Today, let us suppose that everything is fine with me and I have joined the organization. Suppose the entity says he will be there till 70 years of his life. Okay. So based on that, they do the working of the mortality. मैं 3 साल काम किया. Okay, usual health related hazards, I mean work related hazards have come into place. Okay, overweight, lack of exercise. Okay, and then you have all those things which come along with that, cholesterol, this, that, XYZ. So now your mortality rate, will it be 70 years? Answer is no. 70 का 50 हो सकता है, 50 का 60 हो सकता है. So there will be a change in the mortality rate during and after employment. Rates of employment turnover. I am working in a job where I give routine feedback to the HR that I'm not satisfied with my roles or I expect better roles. So when 3-4 such feedbacks go, what is the significance? It means probably if the roles do not change, then the employee turnover is very much going to change for this employee. You cannot say him to be there for the eternity until superannuation. He can resign at any point of time. Okay. Proportion of plan members with dependents eligible for benefits. If it is a medical benefit, how many children you are having? How old they are? Do they have any other issues? Because we have to cover their cost also. We have to cover their cost also. Proportion of plan members who will select each form of payment option available under the plan terms. Claim rates under medical plans. So if they have given me a health insurance and I have never claimed that, so then that also they will be factoring. Okay, so इसको हम लोग बोलते हैं demographic assumptions. It's related to characteristics as a person. Finance assumptions to be based on market expectations at the end of the reporting period for the period over which the obligations are to be settled. They deal with matters like discount rates in nominal terms, unless real terms are more reliable, example hyperinflation, future salary and benefit levels, future medical costs, taxes payable on contributions relating to service before the reporting date or on benefits resulting from that service. Are you able to understand? So basically, these are your financial assumptions. Okay. All right. Now, what is this? What is this? Is it certainty or is it an assumption?
Assumptions.
Assumptions.
तो फ्यूचर में कैन दे चेंज?
Yes, sir. Yes, sir.
अच्छा, इसमें से कोई ऐसा चीज बताओ जो ऑर्गेनाइजेशन के कंट्रोल में है। टेल मी वन थिंग विच इज इन द कंट्रोल ऑफ द ऑर्गेनाइजेशन।
नथिंग सर।
नथिंग इज इन कंट्रोल ऑफ द ऑर्ग। सर फ्यूचर सैलरी नहीं है आपके कंट्रोल में। You have to compensate depending on market rates. Otherwise, your employee will run from your organization to somewhere else. Okay. So nothing is in control. So abhi you said, sir, these assumptions can be subjected to change. So if they subject to change, will my obligation calculations change?
यस सर।
Yes. So if those obligations change, they are changing as a result of change in which assumptions? They are changing as a result of change in actuarial assumptions. Yes. And actuarial assumptions are not in my control. So if they are not in my control, should I take it to the P&L or should I take it to other comprehensive income?
सर अदर कॉम्प्रिहेंसिव इनकम।
That is the
OCI,
reason.
sir.
That is the reason why under Ind AS 19, the impact of change in actuarial assumptions is taken to other comprehensive income. Okay. And it is not reclassifiable. It will go from OCI directly to reserves. वो फिर से P&L में नहीं आएगा. Did you understand? Yes.
Yes, sir.
यस सर।
And this thing that happens, actuarial assumptions change जो हो रहे हैं, वो क्यों होते हैं? अनुभव की वजह से, एक्सपीरियंस की वजह से. So we call it as experience adjustments. Are you able to understand the theory? Yes. So
Yes,
today,
sir.
if somebody calls you out comes to you in sleep and asks, where does change in actuarial assumption impact go? You should be able to tell, sir, it goes into your other comprehensive income and is non-reclassifiable. Okay. All right. So that takes care of this particular point. All right. Now, ये सब वही theory है. Okay. Defined benefit obligation to be measured on a basis that reflects the benefit as per plan terms, estimated salary increases, limit on employer share of cost, contribution from employees or third parties, effect of changes in state benefits. Future benefit changes, if they are informal, result in such changes not to be reflected. Actuarial assumptions should reflect such changes, example, past history, etc., etc. So all this you can just go through for homework. That is just to add knowledge to what you have already learned, but it has no major exam implications. Okay. Mortality and medical cost, I have already explained. Go through this for homework. Are we able to understand? Yes. Do this for homework, this question also. Okay. All right. Coming to the next part. Okay. So this is all related to service calculation of the ultimate cost of benefit. Now, what may happen sometimes is, there may be a change in the present value of the obligation. There may be a change in the present value of the obligation for services rendered in prior periods. Sir, current period में मेरे employee ने काम किया, current year I booked his cost, that is current service cost. But here something is changing due to prior period implications. We call that as past service cost. Now, why does this arise? Sir, this arises either due to plan amendment. Plan amendment matlab kya? The plan is modified, which is resulting in a change in the obligation, and that change in obligation is giving rise to a further hit in the expenses or a further reduction in the expenses. So this change in the obligation could happen either due to plan amendment, or it could happen due to curtailment, Are we able to understand? Yes. Are we able to understand? Yes or no? Yes. So let us look at this question through a question. Then I will again visit this particular slide. Then I will again visit this particular slide. Okay. All right. Ratna Limited pays a lump sum benefit on termination of service equal to 1% of final salary for each year of service. The salary in year 1 is rupees 1 crore, assumed to increase at 7% per year. Discount rate is 10% per annum. Show the buildup of obligation in respect of an employee expected to leave at the end of year 5. Ignore all actuarial assumptions other than the given discount rate. Ratna wishes to revise the percentage of benefit from 1% to 2.5%. Discuss the impact of this change if the benefit was revised at the end of year 2 or at the end of year 5. Okay. So let us check this. Simple question. Okay. All right. Year 1 salary is 1 crore. At the end of year 5, some students are ultra smart. They will take 1 crore into 1.07 raised to 5. Okay. एग्जामिनर दूसरा चीज देखेगा ही नहीं, यहीं पे रुक जाएगा, बोलेगा बहुत सही है, मेरा काम आसान हो गया, आई डोंट इवन हैव टू लुक एट द रिमेनिंग स्टेप्स, यू मेड अ मिस्टेक हियर. 7% year on year increase. So at the end of first year, your salary is 1 crore. Second year, it will be 1.07 for the first time. Then third year will be for the second time. Fourth year, fifth year. So 1.07 raised to 4 it should be and not raised to 5. Okay, this is a very common mistake that students do in the exam hall under stress. Okay, so just be very alert when you get such questions. And what is, so that comes to 1.31 crores, 1 crore 31 lakh 7,960. So what is the cost of benefit on termination? 1% of final salary for each year of service. So this employee is supposed to leave in 5 years. So 131,07,960 into 1% into 5 years, 6,55,398. So far, are we okay with the calculation?
Yes, sir.
Yes. Okay. Now, attributing benefits to period of service. 5 साल का है ना, तो equally attribute करते हैं. So 6,55,398 divided by 5. So 131,080. You are going to do the workings like this. Okay. And then the accrual. Yeah, I think I don't need to explain to you now, because this is exactly what we did for 45 lakhs in that earlier question. ये बस उसी का repeat है. Only figures are different. So illustrative accounting treatment: debit expense account debit, credit provision for liabilities for both the interest as well as the employee benefits. Is it okay?
Yes, sir.
Yes. Any doubts? All right. No doubts. Now what is happening is management felt 1% is very less. We should give 2.5%. So ultimate cost of benefit revised will be on the basis of 2.5%. So salary assumed at end of year 5 is 1.31 crores. Cost of benefit on termination is 16.38 lakhs. 16.38 lakhs. Is it okay? Yes. 131 into 2.5% into 5%. 2.5% into 5 years. Are we able to understand?
Yes, sir.
So मेरा benefit change हो गया क्या? 6,55,000 has become 16,38,495. It is 16,38,495. So this is my change. I'm doing 16,38,495 divided by 5. I should have accrued 3,27,699 per year. Are we able to understand? Yes.
Yes, sir.
And
Yes, sir.
we now, अच्छा, अब मुझे एक बात बताओ, 1% to 2.5%, the change in the plan formula that has happened, is it within the management control or outside the management control?
Within the management control.
Management control.
It is within the management control. तो किसने डिसाइड किया? सर एंटिटी ने खुद डिसाइड किया. सर इफ एंटिटी itself has made the decision, then the impact of change in obligation because of this, see obligation is changing, yes, so impact of change in obligation, where should it go? Should it go to P&L or to other comprehensive income? Yes,
PNL.
P&L, sir.
it should go to P&L. भाई take to P&L everything that is definitely within your control. कुछ अलग होगा तो देखेंगे, but by and large the P&L should have all the items that are coming under your purview. That is coming under your purview. Are we able to understand? Are we able to link the things? Yes, to what we have. Yes, all right. Now suppose the change happens in year 2. Year 1 तो वही rate 3,27,699, ठीक है, and 4,92,410. This will go on building up to 16,38,496. So now, what was your cost earlier? 1,96,964. Correct? This is the original plan. Any doubts here?
No, sir.
वो सर
The revised plan is 492,410. Yes. Assuming there is a plan change in year 2, 492,410 minus 295,446. So that comes to not 295, sorry, 196,964. My bad. 196,964. Are we able to understand?
Yes.
Yes. This increase of 2,95,000, where shall it go?
Past service cost.
कहाँ पे? P&L.
Debit to P&L.
Debit to P&L. Are we able to understand?
Yes, sir.
Yes, perfect. So this is within my control as the entity. So I have to take the responsibility and shift it to the P&L. Okay, so that is the first thing. Next. If it happens at the end of year 5, then what was your obligation here? 6,55,398. So this will come to 16,38,495 minus 655,398. So that comes to 9,83,097. This will come when? In the 5th year. So in the 5th year, 9,83,000 ka hit where I will take?
So P&L.
P&L. This also goes to the P&L. Okay. These are two exclusive cases. They are not having any bearing on each other. Plan can change either in the 2nd year or in the 5th year. It cannot change both the years. Okay. So there are two different conditions. So this is the P&L and this also will go to the P&L. Are you able to understand? Yes.
Yes, sir.
तो इसको हम लोग बोलते हैं past service cost. We call this as the past service cost. Okay. Why past service cost? There is some plan amendment or plan curtailment that has happened. And because of that, a significant reduction by the entity in the number of employees covered by a plan. Okay. So that takes care of this one. This question also is done. All right. Okay. Balance we can continue tomorrow. Okay. Balance we can continue tomorrow and close it. Is it okay, everyone?
Yes, sir.
Yes. So I hope it was meaningful for all of you. Yes.
Thank you, sir.
Thank you and see you guys tomorrow. Okay. Thanks, everyone. Thank you. I hope nothing else is left out. It's 10:05 also. Okay. Fine. Okay. That's it. Thanks everyone for interacting. Okay. See you guys. Session done.
Thank you, sir.
Thank you. Thanks, Nisha. Thank you. Thanks, Jimmy. Thank you. Thanks, everyone. Okay. Sir, session conclude. Yes. Thank you.